we're going to move on from there and go to our last article today and how to track housing data and what's coming next. So this is from Housingwire as well. And this is actually a personal pet project of the person who works at Housingwire, who watches about mortgage rates running higher, mortgage rates falling, and then kind of what activity happens around that time. Yeah. So I want to kind of just summarize. Some of this is validating, but some of this I think leaves us is open to interpretation for what it means moving forward. So let me preface it, and then we'll go to the questions. Okay. So when mortgage rates were running higher earlier in the year, like 6.75, 7.5, the purchase application data had 14 negative prints, 2 flat prints, and 2 positive prints, meaning there was less mortgage application activity. When mortgage rates started falling in mid-June from the yearly peak of 7.5 back towards 6, the purchase applications had 12 positive prints, 5 negative, and 1 flat. So what you see is in the entire course of tracking all of these months, only 3 total flat prints. But when rates went down, 12 positive prints, rates went up, 14 negative prints. So this to me is that match and that intersection of people being aware in the market, their behavior, and their affordability. So what do you think, given that this is kind of showing that it's obviously everyone trending in one direction when it's high and everyone trending in the other direction when it goes low, do you think that this is fair for us to expect the exact same thing in next year? If we have a tighter window of, let's say, 5.5 to 6.5 for rates, do you think it's still fair that we'll see just as much negative prints when the rates go up to 6.5 or when they go down to, let's say, 5.5?
I mean, this is data that's been collected. I'm going to say it's going to be the same trend.
Yeah, I think so. Because, I mean, obviously we saw it throughout the year. When rates went up in October, it got quiet. But when rates dropped before October, everybody was rattling the cage. We got a lot more, causing a lot more action. So I do believe that, as the rates do fluctuate, and again, they talk about the ranges of what they've already been speaking about of what's going to happen in 2025. So I do believe that, there's going to be those highs, there's going to be those dips, and then you were going to see people run to the applications once rates drop a little bit, and then digress once they go right back up.
Okay, what do you think, Memo? I have a takeaway. I just wanted to ask you guys first what you think is going to happen.
Yeah, no, I mean, I'm going with this, so break it down, Andy.
So here's what I'm going to say people should do. So given the fact that people slow down when rates are on the way up and they speed up when the rates are on the way down, what I'm going to tell you is the first week or month, you see rates go from their localized high to their next pit stop low. That's when you start. Yeah. You start your application right there, because the subsequent weeks, if it is trending in that downward trajectory, will end up going into that bottom rounded out 5.5 or 6 if you're starting at 7. So given that, I'm going to go back and say this very clearly. There were very little mortgage applications from 6.75 to up to 7.5. But then from 7.5 down to 6, a really steep increase of applications. Yes. So the point here is, if going back to our roller coaster at the top of the show, if I drew this out as a graph and you see the rate bend going up to 7.5, right as it kind of tips over to 7.25, that is when you need to start applications. That is when you need to start. Yeah. Or maybe even I'd argue start on the way up as it's going to its potential peak. Start there, because it'll crest and then come back down, and you're already going to be in position to win.
And that's what I'm referring to. If you just stay ready, you'll be able to catch those dips and those highs. And it's easier to stay connected with your, professional mortgage lender and ask them, hey, where rates are at, instead of you trying to, find it in the market or trying to, find it, through social media. Although those resources are great, half the time when it gets to you, it's already a few days to maybe a week out. So you want to hear from somebody that's in daytime, actually listening to day in, day out, because the data is going to be a lot more accurate than if you hear from, your resources on the internet. But I would say just make sure you keep it honest. Go research in the online and then ask a mortgage professional or a realtor.
So Brian, quick question. We're on the internet saying this. Yes. What's the difference?
I do
we're sending this to our people that listen to us all the time. So, we're giving them direct that day in, day out, information.
Brian is right. So I'm just teasing Brian. I'm not trying to put you on the spot. I'm teasing. Happy belated 30th birthday, by the way. I'm teasing because, we are on the internet saying this. So aren't we also guys on the internet talking about rates? Yeah, we are. But every single day we're looking at rates because the market's open, our screens are open, and we can see live pricing. Yeah. So you may be watching this a day, a week, a month, or however many months from the day we recorded it, but every single day we can tell you what's going on in the market.
Yeah. I mean, if you're in the market, you're either refinancing, purchasing, stay in constant communication with somebody that can just give you information on a regular basis, whether it's going to be on a weekly, daily, however you want to, whatever you can tolerate, right?
Yeah.
But I do like that advice, Andy, where you're saying if the rate's at 7.5% and you see it go down to a 7.25%, that's probably a good indicator to start saying like, hey, let me get in there, right?
Yep.
One of my biggest beliefs is don't always follow the herd. Right? People who always follow the herd are the ones that have the whole FOMO also. And then they have the tendency of making an irrational decision and not putting themselves in the best position possible.
Yeah.
So when everybody's following the herd, everybody's buying everything, that's where the wars come. That's where the sellers are no longer providing these incentives. That's where everything just starts changing.
I'm glad you said that.
Prepare yourself, when, like you said.
I'm glad you said that because I think sometimes I can come across, and I'm just specifically putting a mirror on myself right now. I think sometimes I can come across like I'm talking to everybody, like everybody should buy a house. I'm not saying that. I'm talking to those of you who are seeking out mortgage and real estate information because you're in the pursuit of buying a house. You're who I'm talking to. I'm not talking to everybody. So, we sometimes get a comment like, oh, I'll never do this or I'll never do that. Well, then I'm not talking to you. I'm talking to the people who they are looking for a solution in their life. They need help. They're struggling financially and they're private about it. They don't told anybody that they're swimming in $69,000 of debt, but they're going to need to use their house to get themselves out of a trouble spot. They're going to get kicked out of their rental place. They got to buy a home. They're moving. Their job's changed. They're divorced. Like, come on, you name it. That's who I'm talking to.
Yeah.
And the herd doesn't always know what's best for you, especially when the herd's conditions and variables aren't the same as yours.
Yeah.
If they're not the same, stop listening to them.
Yeah, exactly. I mean, hey, everybody, we have a lot of investors that we work with. I myself work with investors, right? Do I always go and buy the house that's already readily available for me? Or do I try to buy a house that's already discounted, right? Do I follow the herd and say, hey, I want this turnkey? I'd rather buy one and then make it turnkey and do whatever I decide. Yeah. So there's different appetites for different people.
Well, and that goes back to you having a team. Like we talked to everybody here, like you need to have a team behind you. If we're on that mortgage, if we're with the mortgage coach on that team for you, Memo's talking about having a team, whether it's fellow investors, but it's also the contractor and all the people involved and the architect and everything from top to tail in that whole deal. It's not just, you yourself bootstrap it on your own.
So don't go buying Bitcoin at 100K.
Oh, geez.
So this is, what I put here is one of my thoughts. This article emphasizes the importance of leveraging real-time data to stay ahead of housing market.
Boom. Right? Great point.
So that's what I put right there, and it's good for us, for all of us.
Yep.
I like to follow it. I want to find opportunities. And so there's always due diligence that I have to do behind it.
Yeah.
Similar to the advice that I gave earlier about that person wanting to build ADUs. There's data that you have to go.
Yep.
And there's stuff that you have to do due diligence, right? Knowing the data would be your sales comparables in the area to see if your home's going to be even that valuable to add those units.
But that's also why I feel like, like we said, it's so important to talk to somebody that knows the ins, because a lot of people could take that data but not really know how to apply it.
Correct.
And you bridge that perfectly with your client when she's like, hey, I want to do this because I have the knowledge of what can be done. Theoretically, I've seen it, I've read it. She's probably, spent a lot of time investigating it, but you're like, hey, you can't really do that, or it's going to take this, and that. What about you still stick on the goal of real estate, but just focus on this aspect? Yeah. And it completely opened up a world of saying that, hey, how you took the insights and was able to bridge the data. Yeah. So I think that's a killer combination.
For all of these reasons you guys are talking about, I think that we're going to see a really nice thing happen in 2025. I think we're going to see increased sales activity in the new year because I think there's going to be this like meeting of the minds. There's pent up seller demand. There just is. You're going to start seeing more current home inventory, not new sale inventory, but current inventory come to the market because of pent up seller demand. And again, they're going to have life changes that necessitate them selling their house, whether we like it or not, whether the market's in their favor or not. At the same time, if rates do kind of hover and keep this nice padded zone between, let's say, 6 and 7 or 5.5 and 6, that's going to give people a more predictable outlook on their own personal affordability and what they can go confidently look for. If those two roads can converge and match, where buyers who are can afford and who are like chomping at the bit to buy, and sellers who are pent up their demand, they just need to put their place in the property, I think we could see a nice uptick in sales inventory next year.
Absolutely.
In that space.
I agree.
Yeah.
It's very possible because I've tried to argue in prep for the show today, I was like, okay, poke holes in that argument. And I was like, okay, well, it could be this. Well, what if this happened? And there's always going to be some outlier situation that could cause this whole theory to blow up. But I think that given what we know now, given what we have, all the data for 2024, looking at 2025 and what things are or are not changing, I think that we could actually see a lot of increased sales activity in the new year.
Yeah, no, absolutely.
I agree.
Absolutely.
100%.
Yeah, and there's now more to select from.
Yeah.
You know, we talked about this earlier in a different podcast. You know, our buyers are actually putting offers on properties, multiple offers.
That's right.
On different properties. Hey, I don't like this one after they do the home inspection. Well, the seller's not, doing the improvement, so they back out of it and they go somewhere else.
Just think about it from 24, 36 months ago, it was the sellers getting to pick their buyer. Now it's buyers getting to pick their home in some cases. So that's tilted.
And that's when you're talking about not following the herd.
Yeah.
You go ahead and you do those things right now that there's not a lot of buyers out on the market right now because of the rates. So this is the good time. We already know that rates will go down.
Yeah.
So just like the saying says, what goes up must come down. It will.
Yeah.
So it's just having being patient.
Yeah. I'm really optimistic about the new year, guys. I think that, again, I know we've had we've endured in 2023. We had a lot of time to endure in 2024 as well, but I think that, not just to be, definitely not to be salesy. I just see that there's going to be a lot more opportunities for people who are going to be coming into the market in 25 than even there were in 24.
Correct. I agree 100%. I mean, again, it boils down to simple economics, supply and demand. We're not building enough homes for it to go around where prices of homes are going to go lower.
Yeah.
And everybody was talking about like, hey, we're going to see the mortgage meltdown like we did in 2008. It's been 4 years since we've been hearing that.
That whole thing was
hasn't
underpinned
happened
by the financial markets. I mean, that was a big rug pull because of a lot of things. That's not even the same argument now that it was back then.
So
it's not even the same.
But what happened to those conversations, right?
I know. Well,
so
I know. Sorry, I'm not trying to be mean about it. I just like that. To me, it's a stupid argument at the top, not because you're saying it. It's just these people that are saying that. It's like the entire conditions of the market were completely different.
Yeah.
It's not even, it's apples and oranges. It's not even apples to apples conversation.
Yeah.
The only word that's the same is mortgage.
Yeah, there you go. Well, my biggest advice is we are coming to the end of the year.
Yeah.
Now's the time to start your strategy, your new plan for 2025.
That's right.
What's going to put you in the financial situation that you currently want to be in, that you're not in and want to be in. So plan it. Surround yourself with the people that can take you there.
Yeah.
Whether it's this year, you're looking in 2025, you're looking to invest in the stock market and kind of have that goal of like, hey, let me leverage my home. Let me see by going to a lower interest rate, putting that money, applying it there. Or you're looking to build an ADU, whatever it may be.
Yeah.
Now is the time to start looking into that.
Yeah. Good.